moved the rupee, right? That's the big question. And what does it mean for all of you sitting at home and indeed for the exchequer? What does it mean for the companies that are using the rupee? And in fact, a lot of the exporters that will benefit from it. Of course, this is a conversation that is happening because the Indian rupee hit a low point of 83.42 on Friday during trade. And that, by the way, is an all-time low. And then in offshore trade post that, Samina, it went further lower. The big question is, why did it move down?
I think the only good thing, Alex, in all of this is this is not the fault of the rupee. It's only about the dollar. And if you look at how the Asian currencies have been behaving after the Fed maintained status quo on its rate cycle, you saw the rupee, the yen and the yuan actually decline very sharply, right? And that's really what happened on Friday. So while the quantum of decline was not very large, I mean, we went down, sure, we did decline. We closed off the day's low point. But I think the street was a little nerved because it was a brand new low on the local currency. Sure. Now, of course, the timing of it is not great because a lot of kids and parents are going to be going on spring holidays. So, of course, they're buying dollars that are expensive, and that could be why this is making headlines. But on a more serious note, let's take you through what happened. The dollar rupee declined sharply in opening trade. There was some weakness. There was a little bit of RBI intervention. But towards the close, where we saw the rupee actually end lower, what you saw is the RBI was conspicuous by its absence. Now, that was something that caught a lot of people's attention. Also, historically, what we've seen is that every time in the month of March, which is year-end, dollar demand actually goes up quite sharply. Now, who are the guys that are buying dollars in the market? They're largely importers. You have crude guys, you have other importing companies. I mean, 80% of India's crude demand is actually imported, right? So all these OMCs usually spur up their demand for dollar to pay for the crude as in the month of March. So that's an annual phenomena that usually takes place. Along with that, what you also did see is that hedging costs have also shot up significantly. So while you're...
What is that indicative of?
So it really means that what exporters are trying to do at this... So, okay, if you have a stronger rupee, what do you think an exporter is trying to do? He's trying to ensure that for the foreseeable future, he can lock in this rate.
And most exporters do that.
And most exporters are mandated as well to do that, right? You want to play it safe because the last thing you want is currency fluctuation impacting your value in terms of top line. In this case, importers would have liked to hedge because you really don't know which direction the rupee is moving in. But the inability to do so was on back of a massive premium. So you did not see too much of hedging activity happening. The other thing which we talked about, and you called it technical, and I think this is what's technical, is you saw a number of stop losses getting triggered. Okay. So you had important levels on the dollar rupee pair which got locked, which got kicked in because of the way the dollar had behaved in overnight trade and in Asia in the morning. The impact of that was stop losses got hit, and then you had to go out and supply those dollars in the market, which were in short supply technically on back of importers buying so much more.
And it's interesting because just, I think if I'm not mistaken, over the weekend or on Friday, you had data on the forex reserves that came out for the month of, or for the fortnight ending 15th.
And I think one more factor which I want to quickly mention is it's also book closing for investors worldwide, right? So March usually sees FPIs also start checking out. So they're going to be closing the books, which also means that if you're selling the Indian equity, you're buying dollars and you're taking it out. Friday saw 3,300 crores of equity being sold. So you had FPIs, you had OMCs who were coming in and buying, you had stop losses being triggered, you had an arbitrage trade opportunity because the onshore and offshore, there's a 50 paise gap. So you were buying in the onshore market and selling in the offshore. That led to the other impact. So lots of excitement for currency traders.
But then the one missing element was the RBI towards the end.
Yeah, and that is very interesting.
Perhaps the RBI also thinks that all of these factors will dissipate.
And they should, right? I mean, I think there are a couple of things. So what's going to be important is to see how the dollar rupee behaves this week. The good news is the dollar index globally is trading flat. So there's no major sort of strength coming in.
It's 104 or thereabouts.
The yuan and the yen are also holding steady, which is again good news. So if you're opening to those cues, a gap down on the dollar rupee pair, so a stronger rupee can be expected. It will be volatile. It'll be interesting to see what the RBI does, but some of these factors will play out this week too. But from a more medium-term perspective, most traders believe that with the passive inflows coming into India
on back
of JP Morgan and of course Bloomberg, the rupee will strengthen. And we've seen flows coming into the bond markets consistently for the last 7 months. So that's a positive. You indicated that reserves are a record high.
Yes.
Good news again, because this is some ammo for the RBI. If they start getting nervous about the currency move, they can go out there and supply the market with as much dollars as they want. Now, again, the only jack in the pack again here is crude, Alex. I think, I've been harping about this for so long, but I really think this could change the complete dynamics, be it our deficit, be it the currency, be it equities, be it earnings for India Inc.
No doubt. And we're already at $87. You pointed that out earlier today, and $95 is not too far away. In fact, triple digit is also not too far away. And of course, as one of the largest importers of crude, that hits the exchequer immediately. Of course, on the flip side, and you've pointed this out also, and we pointed it out in the past, a weaker rupee is essentially best for the IT companies, which are
IT and pharma, actually.
IT and pharma, which are a little bit down in the dumps right now.
Holiday goers, importers are not going to be happy. So people like you and me are not very happy about this.
You're pushing your holiday, Samina?
I am, for sure. Waiting for the rupee to get to 70, which is never happening.